Dave Johnston here with Day Trade the Markets. Today is Friday, January the 27th, 2017. We're looking at the gold market here. It's a 2-minute chart utilizing the Day Trade the Market software. The market here has had a bearish tone to it the past couple days. We did make an earlier short trade that worked out nicely, but the market has turned around enough, in my opinion, to go ahead and get long. So we're now long from 1186.70. We're looking also to buy at 1186.20. So it appears that this rejection off of the lows here is having some sustaining power to it. You can see the market dipped down here, got quickly rejected. We also did one off the high here, but you can see that when it sold off, it didn't get anywhere near back down into this area. Whereas this one here, it sold off a little bit. Now it's come back up. And it's actually erasing part of this excess that was formed here earlier in the day. So that's why I believe that the gold here actually does want to go higher and will go higher and likely make some new highs for the day, and then move on up and perhaps test into the 1190 to 1191 area. Okay, we just got filled on the other contract, so I'll put in, I should just make a couple of those here first. Yeah, I'm going to put the stop in down here. I'll put our entry here, and we'll just leave that off for a moment. This low that was formed right here is at 85 even, so I'm going to go ahead and put in a sell limit at 84.70 right there. Sell stop, so we got that right at our marker there, so that's good. And it's a little bit bigger stop than I'd like to have. I mean, it's about $1.80. Usually like to keep them under $1.50, but that's fine for now. Hopefully be able to adjust this fairly soon. I'm going to go ahead and put a sell limit in for 2 for let's see, I think I'll do it at 1180. Yeah, there we are, right, 1188. Sell limit 2, and we're long from 1186.50, so that'd be $1.50 profit for the first 2. And I need to just put that marker in there at that price. So there we go on that. So we got everything in place. Hopefully the market can continue to erase this here. That's kind of the stumbling block at the moment. Hopefully it can do that and continue on up. So I will pause the recording right now and start it back up when needed. Well, as you can see, unfortunately, the market came to within a tick of our objective here. Did not get us filled. So I'm going to go ahead and raise this stop, though, now that it's moved that far in our favor. Move it up here to 85.50. We're long from 86.50. So risking still $1 on this trade. So we've reduced the risk, and hopefully we can still get filled. Hopefully we'll get another bounce here, so we're going to monitor this, and but for the time being, we're just going to let the trade unfold. So once again, I'll pause the recording. Okay, it's turned right around, come right back up to our limit price within a tick of it once again. If it doesn't fill it here in the next couple of, or minute, I'm going to just go ahead and exit this. I think what I'm going to do here is lower this down to 87.50, so we can at least get $1 on the first half of the position here. So came right back up there. So anyway, we'll just leave it like that. And I think also I'm going to go ahead and okay, we just got filled on that. So I'm going to go ahead. I need to reduce the stop now, the quantity down to 2 from 4, and I'm going to bring it just underneath that last dip right there. You can see the low on that bar right there is at 86.30. So I got my stop in here at 86 even. Yeah. So we're risking 5 ticks on this second half, and we made 10 ticks on the first half. So that's where we're at right now with this. So once again, well, just before I pause it, I think what I will do is I'm going to place an order to sell 1 contract. Should we get a burst up here like the last time, I want to go ahead and take advantage of that. It could very well get up here. I'm going to put around 89. Yeah, I'll put it at 89, sell them at 1 at 89, just in case we get a spike up there and get filled on that. So that's everything for now. We got everything in place, so once again I'll pause the recording. Okay, just restarted the recording. We just got filled here just right now, just a moment ago, at 11.89. So we're down to one contract here. So I'm going to change that stop amount to just one contract. I'm also going to move the stop up a little bit, just below that last dip there. That last dip was at 87.10, so we got to stop at 11.86.90. So we're getting some follow through here. We were looking at really here is the this black line I have in here. You can go back here. This was the gap. Just go back to yesterday. This was yesterday's high, which is the low of the selling gap. So that was really the next target I was mentioning earlier in the 90 to 91 area. So I'm going to go ahead and I'm going to put a sell limit in up there just below that. That's at 1191.20. I'm going to go ahead and put it in at let's say 1190.50. We'll put the sell limit in there. So and I'll also put another marker in there. Okay, and our stop has been changed, so I'll adjust that to there. So I think we got everything in place here. We got our stop in. We've reached the objective on the first two, and we're looking for about a $4 move on that second one. So I'm going to pause the recording, and I'll pick it up as the market dictates. Okay, just restarted the recording. Now the market's moved from 86.50 up here to 89.50. That's $3. I've only got about a 4, which is 30 ticks. I've only got a 3, only salvaging 4 ticks out of that. So I'm going to raise this stop up here. I'm going to put it up to 87.60, actually 87.50. So we've locked in at, whoops, 87.50. So we've locked in at least $1 on this final contract should it start selling off. So anyway, just want to bring you up to date on that adjustment on that stop. So once again, I'll pause the recording. Okay, just resume the recording. You can see just a moment ago we got stopped right here for a 10-tick profit on that final contract of the 4. So having been long from 86.50, we had 10 ticks on the first two contracts, 25 ticks on the third contract, and 10 ticks again on the final contract. So the thing that I liked about this trade was that even though we are intraday down auction, in our opinion, and I'll just, if I could just adjust that a little bit, there we go. We did have a good sell-off earlier, and I did post a trade that I made after the market had rallied here and then took out that aggressive buying rate here, this green bar. So we had a trade on the short side, which worked out. It worked out okay. It wasn't a great trade, but it was a profitable trade. The reason I say that is because the market turned around very quickly, as you can see, rallied all the way up and made a new high. But you can see the excess right in here. Excess meaning when the market probed up higher, it came down quickly. But when it did back off, the idea was to make some sort of assessment as to the relative strength of the buyers who came in here when the market made a new low for the day compared to the strength of the sellers as the market was capped from going any higher, and then it made a new high for the day. So we had good excess on the low, we had good excess on the high. So it was really a question of, is one of them going to hold, or both of them going to hold? Is one of them not going to hold? And as you can see, when the market did sell off here, it didn't get anywhere near the base of this excess down in here. And it continued to hover near the base of this excess here without really pushing much lower. We had a little bit of aggressive selling here, a little bit more of aggressive selling here, but this aggressive selling was quickly turned around. When it got up above here in this time frame, it continued up with some aggressive buying. You can see another green bar here as it erased the earlier excess. So the sellers who were in here really kind of gave it up at that time. And that's what we ended up by getting long here with the expectation of, could very well get up into this area, the 90-91 area of resistance that we had identified going into the day. So that's really the background on this trade, which made it pretty straightforward, at least in my mind. I know some of you maybe not, but I think utilizing this software in conjunction with just the basic auction principles, really, pulling them together, you can get some really good trade entry locations. So that's really, as I said, why we got long here and we're able to have a nice successful trade. So I think it was about 55 ticks on that trade, which is quite nice. So of course there was 4 contracts being traded, and we started out with a fairly large stop, and the reason being, the initial stop is always, sort of the largest stop, because that's, if the trade just doesn't work at all, moves against you, you're stopped out, you have your loss. But as you can see on this trade, we're also able to make several stop adjustments, reducing that stop, and then even to the point where we were actually locking in a profit on the final partial. So anyway, if you have any questions on this trade or any of the other trades, or our ideas on trading, how we view the market, the tools that we use to identify trading opportunities, you can just reach us at info@daytradethemarkets. So thanks for watching, and we'll see you next time.